Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, we're going to be talking about recently what Bitcoin just did when we deviated from our range. We talked about this in the last video, where if this was a potential, it was most likely going to mean the Bitcoin bottom was in for the short term before we do get some nice upward momentum, at least over the next month. Today I'm going to be updating you guys all of my analysis from last video, sharing with you guys why I actually believe that we got the deviation we needed, explaining what most likely happens from price here, and then mapping out what we can look and expect moving forward over the next couple months. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server or download my free ebook. Links are going to be provided for you in the description to go ahead and check out both. Thank you guys so much for tuning in. And with that being said, let's jump right into this amazing video today. So this was the range that we were talking about in my last video. We were looking at this as more of something along the lines of this. A little bit of a bigger range for resistance, as well as a little bit of a bigger range. We were watching these levels to ultimately dictate where the price was going to go in the short term. And what I was telling you guys with in my last video, we were pretty much right here. We were at the very early stages of us coming back down and retesting this range low. And I told you guys that based off of our last range that we had all the way up here, what we noticed was we kind of ping-ponged back and forth inside of this resistance range for a number of days. You know, it was about a month, a little over a month, that we pretty much just went back and forth in between this range, and you could have traded it for a lot of profitability. Now, what I was pointing out to you guys was whatever way we get a deviation, so in this case, notice how we were going back and forth here. This move here deviated. This technically would have saw most people looking at this as a breakout. When we finally were able to get the prices above our resistance level that we had been rejected from so many times prior. But what we noticed here was pretty much instantaneously after going above the resistance, we fall back below it. And then that showed that, you know, the sellers were too great. There really wasn't enough buy support in this area to continue to push prices higher, which is ultimately why we saw the trend go once again to the downside. Now, I was sharing with you guys this exact same formula as a way to watch this depending on what direction the market took. Now, originally, when we were coming back down onto support of this, I said that we can really see two different things. Option number one is we see a bounce off this level back up to our resistance, where you could look to target a short. Or option number two is we actually get kind of what happened here, where we get a deviation, but it happens in the opposite direction. And that's exactly what we've had happen thus far. So if you guys notice here, what I talked about was the potential that what if this support doesn't actually hold and we make one more sell-off right below that. That would shake out all the weak hands. That would for sure make most people that were at least watching think that we're going to see more downside. And then that was really what I was talking about for disbelief, for the deviation phase that we were talking about. Now this is pretty much what happened. We sold off, and then we got this big bounce to the upside. We came all the way up pretty much to the midway point of the range. And then we have sold off a little bit back below. But as we're watching this, this was what I was watching for the case that we might actually end up making a little bit of a short-term bottom in here. We've been a prolonged sell-off for a significant amount of time for Bitcoin. You know, we're at this point where, as you know, we've been consolidating for the last couple weeks, we're at this point where historically, if we're looking at the 200-week moving average, let's go to the weekly time frame, we're pretty much sitting right on that level, which historically has marked prior bear market bottoms. If we come up here to the log scale and we look back in prior history, we can see that this has acted as our support bottom for all of our bear markets for basically the last 10 years for the most part. It was all the way back down in here in 2015 that we saw it, and we saw it once again happen when we bottomed at $3,200 in 2018. During the COVID capitulation, this was pretty much where we maintained support. We went below it significantly, but the candle bodies were closing right at that level. Now, this is kind of the first time where we've closed below this level, and we're kind of just consolidating at it. And so I think a lot of people are simply just going to expect more downside because that's the most likely scenario, being that we've just been in the continued downtrend for about 8 months now. And so with us watching this, I think that this 200 week is ultimately going to prove to be an important level to watch, and that's why I'm personally going to be watching for that as being somewhat of a level that we could see deviation from. In this case, notice how we had such a significant sell-off to the downside. This sell-off is the one that's taking us right back down to that moving average. If it's historically marked bear market bottoms, or at least has marked every single bear market low or major correctional low over the last, well, basically since 2014 for the most part, if it's done that thus far, I think it's an important level to be watching out for. And so that's why I'm watching out for it once again right now today. Now with us doing this, what I'm really watching for in the short term, I want to see the prices get back above this green level. If we can get back above here and we can start maintaining support, I think that that's going to set us up for an obvious retest of the resistance. Whether we ultimately get that breakout right off the bat or whether we have to come back down and maybe hit the support once again, we're going to watch and see, and it's not going to be determined yet. We're going to have to just wait and see what the market gives us. But for us to actually come back down here and have this big of a move to the upside, which most importantly, let's draw the volume here. We did get a lot of volume that stepped in with this move. This was a lot of buy volume that stepped in. And so assuming that this is a support and resistance flip, and then we can actually get back above this $19,800 level, then I honestly think that that's going to be setting us up for a resistance reaction all the way up here at about 21,600. And then even if we get a correction, I think that with what I was telling you guys in our last video, whatever way we see the deviation, most likely that's going to resolve the trend. And so like I was stating, if we're also sitting on the 200-week moving average, which historically is marked lows of major corrections, then I honestly think that that's something we should consider. Not only are we pretty much sitting on this level once again, which was a great opportunity to buy, but we're also seeing a potential deviation in the short term on the hourly time frame. So I honestly think that this is setting up for at least a short-term bounce. I believe we're due for a bounce. Historically, where we're at from the all-time highs, is pretty close to what we've seen in bear markets. It's not quite, but at the same time, we're down 74.5% from the all-time highs. Bitcoin bear markets were generally about anywhere from about 82 to 85% from the all-time high to the low of the bear cycle. And so we're only about 10% off from being at that exact same threshold. I don't think that we necessarily need to come and make an 85, 84% correction, which would be like 10,000. It's definitely possible, and I think that we should keep any sort of open-minded opinion about the direction the market can take. But with us never seeing an extended blow-off top to the cycle, I'm not necessarily expecting us to have an extended bear market like we have seen in prior cycles. I think it'll follow the same time frames that we've seen in correctional phases. We're at the same time frames of any sort of major correction that we've been inside of Bitcoin, inside of this one here. And so with us kind of coming back down, having this big extended sell-off, what it reminds me of at the very least is kind of what we saw here for Bitcoin when we had our first major correction inside of that bear market, where we pretty much went down 70%. And then after that move, we bounced off of the support, and we had about a 100% move to the upside. Even though that resolved into multi-month downtrending lower highs and then another lower low, I don't think that this bear market is quite the same as the last one. Even though we've had this 74% correction from the high to the low, I don't think it's really going to change the fact that what I'm not expecting is something like this, a bounce back up, and then something like this, and then another crash. I'm not really expecting anything like that, because if you're looking at the 4-year cycle time frames, realistically, if you're analyzing this as our cycle top, 365 days is going to be taking us to November, pretty much the 7th of November. So we really don't even have that much farther left to go, realistically. We got 130 days, just a few more months before we're at that same threshold for where bear market cycle lows would be in play based off of the 4-year cycle. And so, honestly, the majority of the sell-offs, if not the entire sell-off, is probably done at this point. What most likely happens from here is, just a lot of chop. Even if we went to the upside, we kind of came back down and retested this 200 week. I wouldn't be surprised if we ended up doing something like this to close out the rest of this year, where it's really just maybe a higher high. Maybe we come back down and retest the low point that we sat here at about 17.5. But regardless, I'm not really expecting a whole lot. It would be something like this to close out the rest of this year. Maybe when we get closer towards November, that is going to be putting us towards the retest of this low. or we might get something like an Adam and Eve bottom formation. I don't know, but what I do believe is that this 200-week moving average is going to be the line in the sand. You know, the majority of the sell-off is done usually at about 8 months of the bear market, depending on which cycle you're looking from. But with that being said, you know, with us being close to those same percentage returns from the loss of the all-time high, you know, we're only 10% away from that. With us being at a point that's marked bear market lows, being the 200-week, and then with us being close to those same end-of-the-year timeframes following the 4-year cycle, I think it's more likely that this is going to end up being somewhat of a bottoming formation. And we're just going to see pretty much an evaporation of liquidity. A lot of altcoins will just slow bleed into obscurity. Bitcoin, NFTs, a lot of these things will continue to kind of just slow bleed for the most part. And I think a lot of that volatility will just erase all of the late buyers, erase all the panic sellers that were getting absorbed throughout this period of time. And then that's really just what we're going to get the reset for the next cycle. So I wanted to give you guys an update on really what I'm just seeing with Bitcoin. Give you guys an update in the shorter time frames. We got the potential for our deviation. We need to see a follow through on that if we are going to ultimately see a bounce inside of Bitcoin in the short term. But, you know, what I'm watching for is a reclaim of pretty much the $19,900 level. If we can get back above that, I think that that confirms that this is at least a short-term deviation. And then that's going to be setting us up for an attempt back at resistance at about 21,700. If we can get above that, then that's going to ultimately cement us in for at least the short-term low. I would find it likely that we would go back up to at least $30,000 if we can get back above 21,700. So this is what I'm watching for. If you guys found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these updates. If you guys want to join the Discord server, download my free ebook. Links are in the description for that. You guys can also sign up for my video course Signals. Follow all the trades that I take. If you guys want to see what I'm doing inside the bear market, what I'm doing inside the next bull market, all of that stuff is going to get taught to you guys inside the Discord. So if you want to get access to that, it's lifetime, one-time payment. Links are in the description to go ahead and sign up on my website. Thank you guys so much for tuning in. And with that being said, I will catch you in the next one. As always, peace out.